And we are back now for more on the economy. Chris Rupkey, Chief Financial Economist at Bank of Tokyo-Mitsubishi, joining us here in studio. Chris, thanks for sticking with us. We had started by talking about that the number that the White House said some 650,000 jobs saved or created by the stimulus that was passed back in February. The news today coming on the heels of that GDP report yesterday. But we also heard consumer spending dropped in September from the previous month. Is there a disconnect in the metrics?
Yeah, it is interesting. It was basically cash for clunkers. You know, we sold 14 million cars in August and back down to 9 million in September. And that's why spending dropped 0.5% in September. It doesn't necessarily mean anything for what's going to go forward. But in terms of the tax, the stimulus package, 787, the key thing here we used to believe was, it had to be targeted, timely, and temporary. Well, the timely aspect is sorely missing. Out of 787, they said through September, 195 has been spent. So why are we spending another $500 billion from this point when the economy seems to be back on its legs? So this has been one of the slowest stimulus package to hit the economy that we've ever seen.
But isn't it good news that there's still so much more federal stimulus yet to come into the system? And do you think there's enough to pass the baton on to the economy? Does it buy the economy enough time, if you will, to build its own momentum and then continue to expand on its own without stimulus in however many months?
Exactly.
I should be an economist.
Yeah, I don't want to be the glass is half empty sort of person here, but
I shouldn't be an economist.
There's nothing like a $1,000 check sent to families like we had in earlier in the 2000s. So far the income tax part of the stimulus, it's only put $30 billion into the system since February this year. I mean, that's hardly a drop in the bucket. You don't really get people's attention unless you give them money.
So when the heck are people going to get back to work, though? When is the stimulus going to create jobs?
Well, I'm very hopeful that the unemployment rate is close to peaking here. I think that the administration oversold people on the unemployment rate rising throughout all of 2010.
Strategy.
I think we're very, very close within a month or so of the peak in the unemployment rate.
But the flip side of that is because people are still concerned about that number, that households are saving more.
Yeah, but it's not as high, the savings, that we thought it was going to be at one time. As people get more comfortable that the recovery is seeing some legs here, that it is proceeding, GDP is positive, I think you're going to see spending build momentum.
But is that lack of spending right now, is there a possibility that that could stop this recovery in its tracks?
Well, if it does stop, yeah, I mean, the consumer holds the keys to the recovery, certainly. If they stop spending, then we're back to a situation in the financial crisis last year.
Something out for me. I'm sorry. Sure. Something I was confused about. So personal spending, we learned, declined 0.5%. But in the third quarter adjusted GDP, which came in 3.5%, I don't know what exactly consumer spending added to GDP, but it was a plus, right?
Oh, yeah, it was big. It was like roughly 3.5%.
So what's the story about how deep people are reaching into their pockets right now?
Well,
and was that spending that came through the GDP simply a result of the stimulus, cash for clunkers, the first-time home buyers tax credit?
A lot of it was, yeah, the 3.5% for real consumer spending. A lot of that was cars. I mean, don't forget, we sold 11 million cars in July, 14 million in August, and then back down to 9 million. Without cash for clunkers, would it have stayed at 9 or 10 million? But the good news is, going forward in October, car sales are going to come back at October. And don't forget one other thing, the people losing their job is less in the third quarter, and that means aggregate spending should be buoyant due to that fact alone.
Chris, Fed officials meeting next week, are you expecting anything?
No, I mean, there's been some gossip that they're going to change the language a little bit, but, there's enough question marks about the economy at this stage. I don't think they're going to change the language of their low rates, extended period promise.
What question mark sticks out for you the most?
I'm wondering if they're not going to talk about raising rates, but are they going to give us a timetable for, we're going to start to mop up those $1 trillion in excess reserves out there. They might attack the liquidity question about, there is an exit for that, it's coming forward, but they won't talk about lifting rates.
Was the GDP report stimulus to the Fed to get on the ball, start mopping up that excess liquidity, $1 trillion?
It could have been, but then you get the September number today that shows spending back down.
So how is the Fed reconciling all of this? It's got to be a little frustrating.
They like quarterly average data quite a bit. I think they're going to have confidence that the growth is going to continue around 3% in the quarters to come.
All right, Chris Rupkey, Bank of Tokyo-Mitsubishi. Always a pleasure to have you on.
Thank you.